have Jason from Investable.
Great. Thank you for that. So I'm the CEO and founder of a company called Investable. We're all about lending and borrowing to a story. So what is Investable? Investable is a marketplace lending platform for small businesses to share their story and receive short-term funding for growth. So it's all about community-driven small business loans. Our mission is to build a trusted community, really where small businesses could get socially conscious, transparent, and a fun exchange for their money. And get educational resources and get feedback from the crowd. So it's all about interacting with your community, and community could be defined by your geographical community, i.e. those around you who are supporting you in the form of a loan, and your community in the form of your online community of lenders who are supporting you. I'm going to stop and ask another question as well to the audience. Who here is an active investor? Show of hands. How about a passive investor? Who here just puts their money in a bank account and their retirement savings? Okay, great. So I have a really good audience to explain what Investable is today. I break it out into two main slides here. And the way I really want to present today is actually in this model where it's a STAR technique, right? And you hear a lot about it in interviewing. What is STAR? Situation, task, action, result. And the premise behind Investable is about telling a story and receiving funding. So I'm going to tell my own story in hopes that it kind of reconciles and provides a really good picture about what the company is and where we're headed. So my background, I spent 5 years working at a management consulting firm doing strategy and operations. I was doing a lot of accounts payable on behalf of a large CPG player, and I had the glorified role of reaching out to a lot of small business owners, asking about how much money they were owed on behalf of this large corporate client. More often than not, a lot of these small business owners would be screaming at me. They're like, "Oh my gosh, all this money is owed to me. It's preventing me from growing, so on and so forth." And that really triggered the notion of, well, what's out there today? What is this notion of crowdfunding? How could the crowd support a small business? Lo and behold, there is equity crowdfunding, there's debt crowdfunding, there's rewards-based and donation-based. What I really like about debt crowdfunding is the fact that it's a fair exchange and transparent. Plus, I really think that the market is growing and it's a proven space to be in, especially over the last couple of years. So, having said that, going into the small business problems, what I realized is that there was limited low-dollar financing options. The process was lengthy and cumbersome, the bank policies were tighter, and the alternatives were expensive. Some of the solutions with Investable, flexible underwriting, get as much cash as you can with as little aggravation, data-driven credit offers, and 90% less time-consuming than a traditional bank. Our decision time is less than a week, and our pre-approval is that day. The problem for lenders, i.e. investors on our site, is that they lack access to invest directly in the small businesses that they know and love. So what we really focus on is having customer evangelists. So imagine if you have your local coffee shop down the street. Not really the best fit if they've only been open for, let's say, 12 or 18 months. Maybe not the best fit for going to a community bank. Maybe not the best for even a larger institutional bank. Perfect fit for what we're doing, especially if they've really focused on customer relationships as a foundation for their growth. If they need a $30,000 loan, let's say, and it's a coffee shop for an industrial-grade espresso maker, let's say, low-dollar loan, and what we offer is a payback period between 3 and 24 months at competitive rates between 7 and 30%. What they have options to in the market today is not necessarily on the institutional side, but more so at like the merchant cash advance companies or borrowing against personal credit. So what we have a chance to do as lenders and investors is provide that capital specifically. When we first start, our focus is actually institutional investors, but once we move and given some legal stipulations, we'll be moving towards retail participation on those small business loans. So everyday people such as you, me, your friend Joe down the street can contribute to that small business. Why that's so valuable to lenders is they have access to the people and businesses they know and trust and could affiliate themselves with, let's say, if your real focus and emphasis is on food and retail, you could pursue food and retail and beverage investment opportunities across the United States and really focus your loan criteria towards that segment in the market. How it works, it's a rather simple application and process. So it's a 4-step process here. A borrower fills out an application, a credit decision is made, lenders invest directly into the funds and deposit it towards these small businesses, and then there's the payback cycle. The industry today, I'm not going to walk through these for sake of time, but essentially what you have is merchant cash advance shops, small business technology lenders, P2P lenders, equipment lenders, and asset-based lenders. And where we really fit in the market is offering a very short-term, low-dollar loan, again, with an emphasis on story. So we're bridging the gap between rewards-based crowdfunding sites such as Kickstarter and Indiegogo that are very interactive and personal and fun and engaging, with a lot of the more traditional, use that word, over the last 5 years with P2P sites such as Lending Club and Prosper that are very tech-focused and finance-driven. So speaking to that in a little bit more depth here, on this matrix we have innovative and conventional and broad and niche. And what our focus is on customer-facing small business loans only. So nothing to do with consumer loans, only to do with small business with brick-and-mortar locations. So businesses that have a specific focus for their growth on a short-term loan that need the money for growth financing. So working capital loans such as purchasing inventory, hiring employees, things of that nature, purchasing equipment. And what our value propositions are to the customer and to the lender. To the customer and being defined as a small business, what we offer is a pitch platform. It's more than just going to a platform for them to get a loan and then be another faceless applicant and borrower. It's more so sharing their story in getting that loan. Another one is a network, so trusted community feedback. Here on our site, not only do they have a chance to have this media-driven content, but at the same time, lenders and investors in these loans get a chance to interact with these businesses, ask questions about their growth and growth projections and strategy. Some of the other things, resources, webinars, and tools. We plan on offering a lot of small business tools for growth, and such as like hiring employees, doing a seminar on that, doing a seminar on inventory purchasing and management, things of that nature. Loan terms, we're offering loans between $5 and $100,000 in under 2-year notes. So some of the larger competitors out there offer these 1, 3, 5-year note. Our sweet spot is actually going to be lower than that and shorter durations, shorter terms. For the lender, again, involvement in community development and initiatives, diversifying your portfolio with companies you know, trust, and love. Attractive risk-adjusted returns, and because these loans on average are going to be 5 to 7 month loans, their cycle is going to be rather quick. So as a return, you have liquidity in the market. So it's not holding your capital for a long period of time. Go-to-market strategy. We have a heavy emphasis on digital along with strategic partnerships. What we really want to do to break into the market is really take advantage of this localized model. So for example, what we really want to focus on are state and local chambers of commerce. Being that we're all here in New York, we want to reach out to both New York's chambers of commerce and local small business organizations and hubs of information. Work with them, create content for them, interface with these small businesses, and essentially get those customer advocates and evangelists in order for us to critique the product and then expand beyond the New York State. Again, an emphasis on storytelling, and as you see here with owned and earned media, a big point is like if you guys have ever been to a Kickstarter webpage, or if you've ever watched Shark Tank, the premise behind what we're offering for these businesses is to get their face out in the community, really explain what their endeavor is, and then get funding behind it. And as such, with that owned content, we want to be able to share that not only for visibility for the business, but to the platform with similar-minded small business owners. So our team as it stands now, here's just a glimpse of it. On the left are the founders and employees, and on the right we have our team of advisors. Just calling out, we have 2 developers and a designer on board. We have a marketing lead with a focus on digital advertising. And our advisors list, we have on our team our acting chief risk officers, the former chief credit officer of American Express. We do the underwriting in-house. We determine what rate of credit a loan borrower application should have based off of a variety of factors that are business specific. We have a securities lawyer, and we have a recent addition in the VC and PE space. We are actively hiring for team members. Part of the reason why I am here today to meet both technical developers and anyone really passionate about small business and small business growth in the United States. And I welcome any questions or comments.
Have you guys ever had a default? And if so, how do you deal with it, and where do you stand in the capital structure?
Good question. So we're actually, and I should have mentioned this, our timeline, we're launching in May. So we are one of the probably earlier stage companies that Eddie and NewFinance brings to these type of events. But having said that, we have a very sound underwriting practice where we look at multiple data sources, both third-party and user-submitted, ask for things like, and calculate financial ratios that are specific to the small business. Having said that, our loans are all unsecured business loans. And the premise behind unsecured business lending, similar to like an industry-leading player such as Lending Club or Prosper, you really want to diversify your portfolio. It's not about, Grandma J putting all of her assets or all of her savings in one small business loan. It's more so putting them in 20, 30, 50 businesses, maybe with an average yield of 15%, and then an adjusted yield at 12% net delinquencies. We will have third-party collections agency though, to help collect on delinquent and default loans, but seeing as how they're unsecured, I mean, it is what it is.
So just to add on to that thought, so when you're figuring out what the actual annualized rate of return is, you're also factoring in the loss, the potential loss.
Yeah, I mean,
Okay.
any loan on our site is a projected loan based off of the inherent risk and the cash flow of the business, let's say, and some specific financial ratios we look at. But I mean, we will be very clear with our customers when we launch that there's inherent risk in this high yield investment.
Okay.
Hi, I'm more familiar with the peer lending platforms, being an investor myself.
Sure.
So I'm sure you've done some comparison from the point of view of the investor and the business owner,
Yep.
who can also go to peer lending platforms to ask for a loan.
Yep.
What kind of have you seen a difference in rates? If I'm a small business owner, if I go to Lending Club or your platform, should I expect a difference in rate? And the second question, as an investor, what is your typical estimate for the return after you factor in the default?
Sure. Answering your second question first, we're looking at about 9% after default. Your first question, why would a borrower come to us versus Lending Club, let's say? I think with our site, I mean, it's a very different user experience. If you want to have an exclusively financial transaction, it's perfect for a Lending Club. If you need money quickly and you want a small business loan, great, you can go there. But what really differentiates us is the notion of sharing your story and getting customer feedback up from the crowd. So, I mean, it kind of combines the social element of the rewards-based crowdfunding sites, such as Kickstarter, and brings in this notion of, P2P lending as you see it.
Hey, so in terms of the economics of your business model, you haven't talked too much about that.
Sure.
So could you just elaborate a little bit? And obviously, I presume you talked about a 9% net rate. What would be the rate pre-default that you're assuming as well?
So we're offering rates between 7 and 30%. Pre-default, likely between 12 and 14%. Our model is businesses come to us. We do the underwriting in-house. We offer 3 different loan offers, let's say, with slightly varying terms. Let's say 50,000, 45,000, 40,000, maybe at 5, 8, and 11 months, let's say, at a little bit different rates. And the way it works is they publish a campaign based off of the loan that they accept. So similar to like a Kickstarter campaign where you have an endeavor and you post your video and you create your campaign, where our revenue model is where we collect on origination. So on successfully funded small business campaigns, we collect anywhere between 3 and 5% on that. Plus there's a servicing fee component that's taken out of investor paybacks, principal plus interest.
What is that component?
That's 1%. And the one thing I may add, we are very, very early, so I don't have all the answers. I have many of the answers, but not all of them, and as such, I do welcome any and all feedback, so appreciate it. Thank you.
Great. Thank you very much, Jason. Thank you.